Could Chevron be at risk of losing its $33 billion bet on Anadarko? The markets may be saying so. Check this out. The arbitrage on the deal, where the deal prices the stocks and where the stocks are trading, has gone negative. The spread last night closing at just under a negative 2%. In plain English, some traders are making real bets that Anadarko could get another higher offer from somebody else. So, if those arbitrageurs are correct and another bid does come in, who might it be from? Well, of course, there is Occidental Petroleum. David Faber has talked about it in his excellent reporting. Occidental made a bid of more than $70 per share for Anadarko. Investors preferred the Chevron offer. But my sources tell me that Occidental executives have been aggressively, their term, calling around to investors, asking about the stock and potential deals. All right, what about ExxonMobil? Traders tell me that it's possible because the hangover from Exxon's $41 billion deal for XTO all the way back in 2009 is finally beginning to wear off. Exxon could also be looking for more prime property in the Permian Basin of Texas. Another name being thrown around by traders I've spoken with, BP. BP's nearly $11 billion deal for BHP Billiton's assets, that closed last year, and the company finally has freed up cash through all those payments related to the 2010 Macondo oil rig disaster. Also, BP's market cap has not risen like the other majors recently, and BP could feel pressure from shareholders to get larger. But the name that seems to be generating much interest on desks, the one that traders are kind of chattering about the most right now, is Royal Dutch Shell. Remember, Shell already has a joint venture with Anadarko in Texas, making a tie-up easier. It is also a customer of Anadarko's LNG assets in Africa, making a 13-year supply deal for LNG earlier this year. Plus, Shell has been selling off non-core assets and raising cash and is a fairly weak player in the Permian Basin, something investors want to see grow. They want more than 230,000 barrels a day. Now, it is important to note here that arbitrage traders get this kind of stuff wrong all the time. This does not mean that there will be another bidder for Anadarko, but any of the above names could also go after a different company or nobody at all. And even if they did go after Anadarko, Chevron, of course, could still pop back in with a higher bid of its own and end up winning that asset. Still, the negative spread, something to watch. The spread of that deal is now more negative than at any time since that deal was announced back on April 12th.